morning. This is Horizon's Middle East and Africa. Our top stories this morning. Former President Donald Trump is safe after what the FBI is calling an apparent assassination attempt. The suspect is in custody and investigations are ongoing. A busy central bank week ahead. Wall Street is watching for signals on whether the Fed will cut 25 or 50 basis points, and decisions are also due from the Bank of England and the Bank of Japan. Plus, investing in healthcare. Our Mideast Money segment this week looks into the innovations and tech in the sector and how the GCC can play a pivotal role. Stay tuned for my conversation with Michael Lints from Golden Gate Ventures at 8:30 a.m. Dubai time. Well, good morning again. It's just gone 8 a.m. across the Emirates. I'm Eugenia Victorino in Dubai, shaping up to be yet another really busy for markets. And of course, we're going to lead with a story about another attempted assassination on former President Donald Trump. But for now, a quick look at how markets are faring. And what we saw was a very strong week for Wall Street last week. S&P up more than 4% over the course of 5 days of trading. NASDAQ 6%. Best week of the year for 2024. It seems like nothing is going to bring these stock markets down. Let's see what happens with the Fed this week. It's going to be a pivotal week in terms of decision making from all of these central banks. By the way, it's not just the Fed. We've got Bank of England, we have Bank of Japan, we also have Central Bank of Turkey and the South African Reserve Bank too. So a lot coming up in terms of central bank decisions. Today, S&P futures are leaning flat, slightly towards the green. Somewhat of a negative session coming through from Asia. We'll talk more about that shortly. Many of those markets are closed, but the ones that are open are trading in the red. NASDAQ futures also not doing a lot this morning, trading around the flat line. USD, we are tipping a little bit this morning, lower down about 0.25%. And the course and the theme over the past week has been one of a weaker dollar as the markets start pricing more rate cuts out of the Fed, not just out of this meeting, but in subsequent meetings ahead. And as the market pieces together some of the weaker data that's coming through from the U.S. too. That's putting some downside risk on the USD. And then Brent stabilizing at around $71.60 is where we are right now. So not a lot of movement in the last couple of days. But of course, over the course of the last month, we're down about 10%. So it has been, again, a weak month for the energy complex. Let's just zoom out a little bit, though. I just want to draw your attention to one of the charts that caught my attention this morning, which is just really encapsulating how strong the existing hiking cycle has been for the Fed. Just if you look back at how much they hiked since the beginning of this hiking cycle back in 2022, and you can see versus other episodes in history, this has been one of the most aggressive tightening cycles since they started hiking in 2022. They hiked 525 basis points, which also is one of the justifications perhaps for them to go bigger with the rate cuts, because their starting point is so much higher and inflation has started to drop, which means real yields are a lot higher than what the Fed themselves may have penciled in. So something to think about there. We're coming off a very aggressive tightening cycle out of the Fed. What does it mean for the rate cutting cycle? That is a question for markets. All right, let's switch on and talk about markets in Asia. Avril Hong is in our Singapore studio. A lot of markets are closed today, but there is a bit of red on the screen for the markets that are open. What's going on?
Yeah, we are seeing Japan mainland markets as well that are shut today. And amid this, we are seeing the stock gauge for the region, excluding Japan, struggling for direction. The hopes of Fed easing getting offset by data over the weekend from China, just painting an even more worrying picture. Whether you're looking at factory output, consumption, investment, they all miss. Even new home prices declines accelerated, just telling you how much more stimulus needs to be stepped up for the Asian economy. And against that backdrop, the Hang Seng is down a touch. We're also seeing the Hang Seng China Enterprises. That is a sort of gauge for the mainland stocks on the Hong Kong markets are in negative territory. And the other thing to keep in mind today as well is what we're seeing on the Japanese currency, as it has strengthened to the level we haven't seen since July last year. But also bear in mind that we have these markets, many of them are shut in the Asia Pacific, so relatively thin liquidity. That might be something that is exacerbating the moves we're seeing in the currency space as well, Jumana.
Thank you, Avril Hong in Singapore, for the overview. Now on to our top political story from overnight. Former President Donald Trump is safe after what the FBI is calling an apparent assassination attempt at his golf course in West Palm Beach, Florida. A person believed to be connected to the incident was taken into custody in a neighboring county.
We have somebody in custody right now that is a potential suspect. We got a little bit more work to do on it, but as we usually do, as soon as we decide that we're going to book him into the county jail and the charges that he's going to be booked into, we'll get those to you and we'll get a picture of him and we'll get you his background.
The White House released a statement from President Biden saying, "I have directed my team to continue to ensure that Secret Service has every resource, capability, and protective measure necessary to ensure the former president's continued safety." Vice President Kamala Harris said she is, quote, "deeply disturbed by the possible assassination attempt and condemning political violence." While Trump's running mate, J.D. Vance, posted on X, "I'm glad President Trump is safe. I spoke to him before the news was public, and he was amazingly in good spirits." And on his Truth Social platform, Donald Trump posted, "I want to thank the U.S. Secret Service, Sheriff Rick Bradshaw and his Office of Brave and Dedicated Patriots, and all of law enforcement for the incredible job done today." Let's get the latest from Bloomberg's Asia senior editor, Bill Ferries. Bill, first of all, just bring us up to speed about exactly what happened and how this second assassination attempt came to be.
Well, thanks. We know the president was out on his golf course early afternoon there in West Palm Beach. And they had, for security purposes, the Secret Service agent was one hole ahead of him on the course. That agent seemed to have caught sight of a rifle barrel poking through a fence at the perimeter of the property. The agent fired at that site, that location, and the person who was there took off and fled and was apparently captured later on the highway north of West Palm Beach. They said that the gunman was 300 to 500 yards distant from former President Trump at the time. A very long shot. It will raise questions about security procedures again, but it also does seem that the Secret Service caught this early, and that agent in question is being praised by law enforcement and former President Trump, as you showed there.
Yeah. I mean, of course, the priority is the safety of the former president. But I do wonder whether what has happened in the last 24 hours will have any implications on the polling, especially given President Trump has sort of faltered in the polls since the debates versus Vice President Kamala Harris last week. How likely is it that he may see a bump in polls after what has happened?
Yeah, we really won't know for the next for at least a couple days whether this has any kind of substantial impact on the polling. Obviously, still a very tight race. We don't have a lot of the imagery and the video that we did from that first assassination attempt about 2 months ago. So that may play into the overall reaction. I do think there will be a lot of a lot more discussion about the political violence and threats of violence in the U.S. election this year. I think the big question for President Trump, though, who's had a rough week since that debate, is whether this provides an opportunity for him to pivot away from a lot of the discussion that's centered on whether immigrants have been eating pets. That has kind of dominated the discussion of the politics in the recent days. This does give the Trump campaign a fresh start. Just a big question whether they will seek to take advantage of that and move on in what is really the home stretch here. We'd have about 7 weeks to go before Election Day.
Yeah. Bloomberg's Asia senior editor, Bill Ferries, thank you so much for the overview. Now, for a look at some of the other stories we're following this morning. The Israeli military says a missile fired from Yemen's Houthis reached central Israel on Sunday. The IDF says the missile partially broke apart in midair after it was shot at. Houthis' long-range attacks on Israel in solidarity with Hamas's war against it in Gaza have mostly been intercepted over the Red Sea. But the Iranian-backed rebels say the missile they used this time was new and hypersonic. This marks the deepest reach yet for a missile launched from Yemen by the Houthis. And Israel's inflation accelerated more than expected in August as the war in Gaza strains the economy and pushes government spending higher. Prices rose 3.6% year-on-year last month, now well ahead of the country's official target. Analysts surveyed by Bloomberg had forecast the rate to hold steady. And Jordan's King Abdullah has appointed Jafar Hassan as the country's new prime minister after the resignation of Bashar al-Khashoggi. This comes days after parliamentary elections in which the opposition Muslim Brotherhood made big gains on the back of anger over Israel's war in Gaza. The new government will need to accelerate IMF-guided reforms and rein in more than $50 billion in public debt. And tomorrow on Horizons, do not miss my exclusive interview with Iraq's Prime Minister Mohammed Shia al-Sudani. Our wide-ranging interview covered the nation's economy, OPEC, and Iraq's oil production, and his thoughts on the geopolitics of the region. That interview is going to be aired at 8 a.m. in Dubai tomorrow, 5 a.m. in London on Horizons Middle East and Africa. And up next, we will get the market outlook with SEB's head of Asia strategy with the Fed's rate path and China's weak economy in focus. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, the Fed will begin a crucial pivot this week, lowering rates for the first time in more than 4 years. Monetary officials from Europe to Asia will also set their own policies against a backdrop of brittle markets. Well, not that brittle if you look at the performance of Wall Street last week. Let's bring in Eugenia Victorino, head of Asia strategy at SEB. Well, it's a very exciting week coming up if you're a central bank watcher, but I guess the pivotal one is going to be the Fed. The market still does not know whether they're going to go for a 25 or a 50. The market's now leaning towards a 40 basis points. That's what's priced in the market. What does it tell us about the Fed's messaging that we're so close to such a key rates decision and they haven't guided better on the messaging of what they're going to deliver?
Well, I think it was really because of the Wall Street Journal article that was released towards the end of last week that actually led market participants to question once again whether there is a possibility of a 50 basis point cut. Having said that, in my view, we've already maxed out the possibility of pricing in a 50 basis point cut, considering that it really is a toss-up right now. However, unless you have a really, really bad retail sales number, I don't think you can price in much more than this. As it is, it's already pricing in too much, in my view.
Yeah. So let me ask you what you are expecting to see out of the Fed this week. Should they go for the 50 basis points, or should they be a bit more cautious, cut 25, and perhaps go more dovish on the outlook?
Well, our view is that it's going to be a 25 basis point cut this time around, although there is a possibility that you can have a 50 basis point sometime in November. But it's just so difficult to have a 50 basis point cut as the beginning of the easing cycle, because that just reeks of panic to me. And even if the economy is not actually worth panicking over, the moment you see policymakers thinking that they need to hit the panic button, then the market reaction would be quite furious. That would actually lead to further questions as to the growth outlook of the U.S.
Yeah, well, Eugenia, we're keeping a close eye on what the Fed decision means for other central banks around the world. We've got another big central bank meeting coming up this week, Bank of Japan. Also, just wanted to flag this morning that dollar-yen has now just dipped below 140. We're actually now negative for the year. So year-to-date in negative territory. What do you think is driving this continuous outperformance of the yen versus the USD? Is it just markets accounting for a more aggressive easing cycle out of the Fed, or is this also a yen trade and that people are anticipating a more hawkishness out of the Bank of Japan?
Well, nobody is really expecting the BOJ to hike once again this time around, but clearly, the BOJ speakers that we've heard recently are sounding a little bit more hawkish than they had been a few months ago. And that's definitely helping the expectations of a hawkish BOJ even through 2025. Now, having said that, the real driver here is the changing expectations on the Fed. So we're having a double-barreled impact on the dollar-yen, and that is really leading to a decline in dollar-yen from here, because rate differentials at the end of the day is really in favor of a lower dollar-yen.
What do you think positioning is like in dollar yen now? Remember, we had that big shakeout at the beginning of August, and people were saying at the time that lots of these carry positions had to be unwound because of people caught the wrong way. Do you think positioning has now flipped into long yen?
I wouldn't say it's already long yen. Otherwise, you wouldn't have this kind of reaction every time that you have an adjustment in the Fed expectations. But because you see, every time that you have a pullback in the expectations on the Fed, it's very easy for traders to be lured by the easy carry, and that's why it can't really be unwound completely. Having said that, I wouldn't say that the traders are really going all in, but every time that they go even just a little bit in, there would be some unwind every time you have an adjustment from the U.S. yields.
What do you think the Fed's cutting cycle is going to mean for other emerging market central banks that you follow in the region in terms of their own proclivity to cut? Will they be incentivized to go faster if the Fed goes faster, or will they want to keep their rates slightly more restrictive to help support the currencies?
Well, as far as the EM Asian central bankers are concerned, we've already seen one central bank that started to cut, and that was from the Philippines, and they started in August. But the Philippines was also the most hawkish in their tightening cycle. Meanwhile, the other central banks, they do not necessarily have the same room to cut as far as the Fed is willing to cut, because they had not tightened as much as the Fed had tightened anyway. For example, Malaysia is unlikely to do anything this year. So we are not expecting any cuts from Malaysia. We are expecting some cuts from India, possibly in Korea as well, but the others, it's just too difficult to front load the Fed at this point, because, you know, while it's an easing in monetary policy, it can easily trigger a panic on growth outlook, which would then put back further depreciation pressures on the EM Asian currencies.
Makes a lot of sense. Fascinating to talk to you and get your insights. Eugenia Victorino, Head of Asia Strategy at SEB. Thanks for joining our show. Now, coming up, as Libya's political power struggle continues, a newfound friendship between Egypt and Turkey could solve the crisis. We're live in Istanbul next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. One-time enemies, Egypt and Turkey, are using their newfound friendship to try and resolve a power struggle in Libya. Cairo and Ankara are pressing the North African countries' two competing governments to reach a deal that would help end a crippling oil blockade. Let's bring in Bloomberg's managing editor for the Middle East and Africa, Onur Ant, who joins me from Istanbul. So this one is interesting. Historically, Egypt and Turkey have not had the closest relationship. If you go back all the way to 2013, since the ousting of Morsi, the Muslim Brotherhood president at the time in Egypt. But there has been a thawing, so to speak, of relations just in the last couple of years. And now we're seeing them both combine forces to help mediate to get to a resolution in Libya. It feels like it's been quite the evolution, Onur.
It sure is. As you said, back in 2022, there was a handshake between the two leaders at the World Cup in Qatar between Sisi and Erdogan. But there really hasn't been much in terms of what that thaw or detente resulted in terms of concrete changes and policies, I think, until now. Now, their rapprochement in Libya could make a huge difference, because the country is, as you said, amidst a major oil crisis fueled by a row over the management of the nation's central bank back in August. And we now know that both Egypt and Turkey, which used to back rival governments in Libya, are now talking to basically what used to be their foes on the ground to get them to agree to a resolution over the management of the central bank. And for those who don't really remember what happened back then, in August, Tripoli-based government in Libya fired the longtime governor of the central bank, and that resulted in a row where the eastern forces led by Haftar basically oversaw a blockade, a shutdown of oil production in Libya and a blockade on export. That's a huge deal, obviously, for the rest of the world because Libya was producing about 1 million barrels a day of oil at the time this blockade or shutdown began.
Yeah, even though it's not really having that much of an impact on the oil market, which tells you a completely different story about what the drivers are in the oil market. From a strategic perspective, what is driving both Turkey and Egypt to get involved in mediating here? What is the strategic imperative? Why do they want to see a resolution in Libya?
Well, any resolution to the Libya crisis on its own is obviously good for both because they now have overlapping interests, which is to make sure that Libya does not basically see a full-blown civil war, which it was on the brink of for many, many years, especially around 2019 when Eastern forces led by General Haftar was encroaching on the government in the west, in Tripoli. Now, that's only one thing, though, and that's part of a sort of larger picture for both countries. We are seeing that their interests are overlapping not only in Libya, but other places that are important to both countries, such as Sudan, which is a neighbor of Egypt, to Somalia and Ethiopia. So we have to see what they're doing in Egypt as part of their sort of regional power play, where I think once past personal feuds was admitted between the two leaders, they have realized that they actually have a lot in common. Especially both in Horn of Africa and Northern Africa, including places like Somalia, which is very, very important.
Yeah, absolutely. Honor, thank you for bringing us that story. A very interesting one to read on the terminal for anyone who's following it closely on our end. Now for a look at some of the other stories we're following. Turkey has asked the U.S. for permission to buy GE Aerospace engines, which it hopes to use in locally made military jets. If the U.S. approves, it will signal the easing of tensions following Turkey's decision to buy a Russian S-400 air defense system. Ankara's request is seen as critical for President Recep Tayyip Erdogan as he looks to modernize Turkey's air force and build up the NATO members' defense industry. And a quick look at markets. Before we head to the break, this is what the equity futures are doing. Not a lot, but of course, anticipation is high ahead of a huge week of central bank meetings. A lot of focus on that Fed meeting. We'll talk more about that the other side of this break. But coming up, advancing healthcare through digital innovation in the GCC region is imperative, says our next guest. Michael Lints from Golden Gate Ventures joins us next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Former President Donald Trump is safe after what the FBI is calling an apparent assassination attempt. The suspect is in custody and investigations are ongoing. A busy central bank week ahead. Wall Street is watching for signals on whether the Fed will cut 25 or 50 basis points. Decisions are also due from the Bank of England and the Bank of Japan. Plus, investing in healthcare. Our Mideast Money segment this week looks into the innovations and tech in the sector and how the GCC can play a pivotal role. Michael Lints from Golden Gate Ventures joins the program shortly. It has just gone 8:30 a.m. across the Emirates. I'm Jumada Versace in Dubai. Big central bank week coming up. As we were just speaking about, the market isn't sure as of yet whether the Fed is going to go for 20, 25 or 50. A lot of articles are being written, but essentially the market is pricing in 40 basis points of a cut this week, so almost leaning towards that 50 basis points. What that has meant is it was a strong week for Wall Street last week. S&P up 4%, Nasdaq up 6%, best week of the year for some of these Wall Street indices. Today we are leaning flat. We've got S&P futures basically not doing much, but leaning towards the green, up 6 basis points. Nasdaq as well, coming off a very strong week, but not doing a lot today. The USD we continue to see downward pressure on the greenback today, down 0.2%. Obviously, over the course of the last couple of weeks, we're down more than 1%. So a lot of downward pressure being put on the USD as we get into the rate cutting cycle. And then Brent sitting flattish today at around $71.50. It is down 9% over the course of the last month. Switching over, and let's just highlight for you the historical context of how high the Fed have gone in this hiking cycle. That's the red line over here. They started this hiking cycle at the beginning of 2022, hiked 525 basis points over the course of this hiking cycle, which tells you they do have a lot of ammunition. There is a lot of room for them to start cutting. And that's why some people are saying they should just go for the 50 and not hold back, given how high and how restrictive rates are right now. So something to think about as we head into the Fed meeting this week. But for now, let's check in on how markets in Asia are faring. Avril is in our Singapore studio. Many of these Asian markets, Chinese markets, are out today, but there is a little bit of red on the board.
Well, we're seeing Asia stock gauge, excluding Japan, clocking slight gains, but it has been fluctuating for much of today amid the concerns about these Chinese data that came out over the weekend, and that seems to be offsetting the optimism that the Fed is going to ease this week. We're seeing the likes of Taiwan, Australian stocks managing to see a bit of green, but the story today really is about the Japanese currency. Earlier this hour, dollar-yen dipping below the key 140 psychological level. Note here that we are seeing Japan market shut, so there might be that exacerbation of the vols or the extent of the moves given thin market liquidity. But also keep in mind how, against that backdrop, the Bank of Japan is set for that decision. It is not expected to change on rates, but it could come through with some hawkish messaging, reiteration of earlier stance. Certainly, recently, what we're hearing from some of these BOJ board members is that the market rout early last month is not doing very much to derail that determination to hike rates again. So that is at play as we look to the Fed and the BOJ this week. Jumana.
Avril, thank you so much. Now let's turn to this region and the efforts to diversify away from oil and find other avenues of economic growth. One sector countries like the UAE and Saudi Arabia are investing in is healthcare. Sovereign wealth funds for both nations have made inroads in the industry. Abu Dhabi's ADQ has consolidated some of its pharmaceutical assets to form one of the region's largest life sciences firms. Meanwhile, the PIF in Saudi last year created a new entity to attract pharmaceutical and biotech companies to invest in drug manufacturing. This has made the Middle East an attractive place for firms looking to commercialize and get to the market sooner, an area in which my next guest sees the GCC commanding a unique role. Let's bring in Michael Lints, partner at Golden Gate Ventures. Wonderful to have you with us on the show.
Thank you for having me.
So maybe let's just pick up on this healthcare theme, because it is seen as one of the pillars of the diversification efforts that many countries around the GCC are really intent on pushing. The other ones being obviously technology, financial services, but healthcare is a key plank as well. To what extent does that create opportunities for a firm like yours?
It does create a lot of opportunities for firms like us. If you look at the healthcare space currently in the GCC, their ability to attract founders from either the US, Europe, or even Asia to set up shop in the region, do clinical trials, and really look at how can we expand the healthcare space within the region. That is one. I think the second one is around just purely investments with deep capital, sophisticated capital in the market. It is really helpful for companies to look at the region and expand that profile here.
How big of a market are we talking about, though? Because if you were, say, a U.S. domiciled company, then you've got a potentially huge market in the U.S. to play for. But if you move over to this part of the world, it's obviously a much smaller market. So then you must be looking for higher growth rates then to compensate.
Yeah, the way I look at this market is take it as almost like an experiment hub. So once you are expanding your company here, you can do collaborations with the government. You can do collaborations with funds like ours. You can do collaborations with large institutions that will help you expand again globally. If I may give one example, there's a company out of San Diego called Biosapien, and they've decided to expand their hub into Abu Dhabi. It helps them to do clinical trials. It helps them to work with departments of health. And it allows them then to become global companies again and expand to the US and expand to Europe. So it's not only about being in the market in the GCC, it is also about using it as a hub for your global expansion as well.
How big do you see the growth opportunity?
I see it as massive, but I'm very, very biased. I think what we're seeing now is for this year, we're forecasted to be around $2 billion in growth in the medtech sector. Forecasting into 2029, we look at 4 or 5x this market. So it's a massive opportunity for companies to look at the GCC as a hub for their business.
Do you think there's some sort of a first mover advantage for being one of the companies to invest in the early stages of this health push? Because we know it is a big focus for the authorities here. Do you feel like you will get a competitive advantage by investing first?
Oh, absolutely. And I think what the GCC has been able to stand out on is collaborations between the different big institutions. So you have government support. You've mentioned the sovereign wealth funds. You have departments of health. You have innovation centers. So that opportunity as a first mover, moving here, expanding your business, using it as a hub, that opportunity is massive.
And what do you see as the specific role of the region in promoting healthcare investment, not just for the region itself, but for the rest of the world? I mean, how much of a global implication is this going to have? You mentioned that you see it somewhat as an incubator of sorts, but what sort of ramifications could that have on global healthcare investments?
It's huge, and if I look at the openness of the region to adapt these technologies and adapt these founders, to have them here, to have their R&D centers here, to work on, again, innovation, to work on trials. Like clinical trials is so important for these technology startups. If you're able to work within either the Abu Dhabi context or the Saudi context or the Qatari context, work with all of these governments, do your clinical trials, then go back to the US. Get your FDA approvals much faster than you would if you would stay in the US. I think that first mover advantage is massive here.
The thing is, when you're investing in healthcare companies, pharmaceuticals, often it's the way that it takes time for you to determine whether these things are going to be successful or not. It's sometimes hit and miss, and you have to wait for the results of clinical trials. So you as well have to be discerning about which companies you're putting your money in. How do you screen for the opportunities?
Yeah, we do take a long time to screen those companies and sort of hit the right opportunity. One of the most important things is just kind of the founder background. Do they really understand the medical science? Do they have a background in this space? We look at their team. How deep is that team in terms of knowledge and experience? Of course, then we look at commercialization. Again, being here in the region, you have a lot of opportunities to look at commercialization, work with clinics, work with pharmaceuticals, work with the big hospitals, which is a massive advantage if you are looking to be based here. So for us, it's a combination of the founding team, of course, the product, but also the path towards commercialization and how much can the region sort of help ignite and emphasize that globalization.
So interesting. What do you see as the biggest downside risk? Obviously, when you're thinking of deploying capital, you have to be aware of some of the things that might not work out the way that you would hope for. What are some of those risks?
The biggest downside risk for us is patience. It does take a very long time to get these companies to commercialization. If we're looking at some of the investments that we're looking at this moment, it might take us 2 to 3 years before it actually gets to market and commercialized. So as investors, we have to be very patient. But we work very closely with the founders and the founders community, but also with the departments of health, with the science centers to help these companies get to commercialization. So we have some early signals whether we think this is actually valid and viable for commercialization.
Yeah, so interesting. Well, I'm looking forward to seeing what you end up doing with all the investments. That was Michael Lints, partner at Golden Gate Ventures. And for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. Now, S&P Global Ratings has upgraded Saudi Arabia's outlook to positive from stable and flagged the possibility for future ratings increases as the kingdom presses ahead with its Vision 2030 economic overhaul. For more on that, we're joined by Chrissy Burke, our Saudi Bureau Chief. It's wonderful to have you with us in Dubai, Chrissy. Always good to chat to you here. Just talk to us about this outlook upgrade that came through. It's an outlook upgrade, not an actual ratings upgrade.
Yes, that's exactly right. First, thanks for having me on the show. It's great to be here. And I actually read this report on the flight over from Riyadh yesterday.
Well, there you go. Something to do. Good reading material.
Exactly. And there were three key takeaways for me. The first is this was an overwhelming vote of confidence for Vision 2030. S&P's view is that Vision 2030 is working. It is diversifying the economy and supporting non-oil growth momentum. The second is that while Vision 2030 will indeed require much higher levels of investment and much higher levels of spending, Saudi Arabia is in a comfortable position to handle this. It can issue more debt and still, it has plenty of room to continue issuing. Then also recalibration of spending priorities. Projects will help give it a little bit more of fiscal space. So the bottom line is that while Saudi Arabia is seeing some of its positioning weakening, it remains in a solid position to go ahead.
Yeah, Chrissy, you and I have also spent a lot of time analyzing the other report that came through. That's the IMF report. And I thought it was interesting that S&P now still see a current account surplus for Saudi Arabia, 1.2% positive all the way through until 2027. The IMF, as we spoke about, are still projecting a current account deficit. So why the disparity between the two?
Well, I think the key point that the S&P is making is that basically Saudi Arabia does need to have higher oil imports, and that will weigh on current accounts. But essentially, it sees that oil production will go up, that oil prices will be stable, and that will support current account surpluses in the future.
Yeah, ultimately, it all comes back down to, well, at least for now, the oil price. But they're trying to move away from that. Chrissy, as ever, great. Thank you for giving us the overview of what's going on in Saudi. Christine Burke, our Saudi bureau chief. Well, here in Dubai, private schools are big business, and demand is seeing some expats paying around $33,000 a year. Wow, in tuition. The most expensive chain in the city, GEMS Education, has become one of the world's largest private school operators, commanding huge prices. The business, founded by Indian-born billionaire Sunny Varkey, is drawing up plans to add 30,000 new school places as demand remains high. And of course, that was a big deal that came through a short while ago with Brookfield Asset Management making a big investment into GEMS. And you can see the opportunity if tuition is $30,000. All right, that's just my editorial spin. Coming up, Senegal's president has dissolved parliament and is seeking new elections. Africa's youngest elected leader says working with the opposition-led assembly had become difficult. We are live in Johannesburg with the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Senegal's president has dissolved parliament in an effort to consolidate power and implement his reform agenda. Bassirou Diomaye Faye is seeking a majority to reassure voters and investors he can fulfill his pledges to tackle corruption, ease a cost of living crisis, and review oil and gas contracts with Senegal's foreign partners. For more on this, Africa's chief correspondent Jennifer Zabazaja joins me now. So what is behind the president taking action now? Why is he dissolving parliament?
Right. I mean, Jumana, to say that he's had a hard time in the few months that he's been in power, I think would be an understatement. Excuse me. He's really struggled to implement any of the reform agenda that he had promised and campaigned on earlier this year. And so what he and his prime minister say is that a lot of this is due to the opposition-led legislative branch. And they believe that this is time then to rethink this and potentially get some of these promises that he had actually wanted to enact moving forward, but at least get the vote as well of the public of what it is that they are trying to do. Excuse me, and perhaps beneficial for the president is that Parliament is actually reaching their 2-year mark, and so he can actually call these snap elections, which is what's happening right now. And so we're going to see whether or not this will actually have an effect on the president. It's important to note that he actually came into power just a few days after being released from prison. The former president, Macky Sall, had actually wanted to prevent him from being in office. So he's really sort of struggled on the way to becoming president at this point in time, and clearly has not eased any bit since he's been in office. So potentially these November elections open up a new opportunity for him.
I mean, it certainly appears to be the case, right? I'm just reading about the history here. He won a presidential vote in March by a landslide. So he, as an individual, seems to be quite popular, but he was held back by the composition of parliament. Assuming things do go his way and he manages to get a supermajority, what implications is that going to have on the Senegalese economy?
Well, what's really been holding back this economy is that they haven't been able to actually kickstart their LNG production. And that is something that the IMF and others have said will really help this country in terms of growing their GDP. Right now, the delays are expected to continue until December. So that's really putting a damper on any sort of growth there. We've also seen Senegal's bonds having an impact. Investors clearly awaiting to see whether some of these reforms that the president has announced will actually be taking place, because they are much needed. We see youth unemployment is quite high. Inflation, of course, is difficult. And we saw the IMF revise down Senegal's 2024 economic growth forecast to 7.1 from an earlier estimate of 8.3%. And a lot of that is largely due to the fact that the government cannot all agree and be in unison about what needs to happen next. So, yes, potentially this opens the door for the government to be able to enact some of these reforms, kickstart LNG production, and actually get the economy growing in the way that it should.
Bloomberg's chief Africa correspondent, Jennifer Zabazaja, always good to talk to you. Thank you. Now for a look at some of the other stories we're following. Nigeria's state-owned energy firm has started shipping gasoline from the Dangote refinery. It marks a step that could end decades of dependence on imports of the fuel for Africa's largest crude producer. The move follows an agreement allowing NNPC to swap crude for an equivalent amount of gasoline from Dangote. The lack of refining capacity in Africa's top crude producer means it has to import most of its refined fuel requirement, leaving it short of dollars needed by other manufacturers to expand. Kenya's government has awarded Adani Group and a unit of the African Development Bank a public-private partnership concession to construct high-voltage power lines. The government says they are currently hiring project teams, and the cost of these transmission lines is estimated at $1.3 billion. Many Kenyans have been angered about a separate proposal to grant another unit of Adani's conglomerate a 30-year concession to run the nation's largest airport. And coming up, recall shock. BMW faces a $1 billion bill to fix a braking system fault affecting as many as 1.5 million cars. We'll have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, BMW took more than 2 years to discover the extent of a braking system fault that may cost it over $1 billion to fix, Bloomberg understands. Customers and dealers began complaining to the German auto manufacturer about faulty brakes in June 2022. So for more on this, Bloomberg's Oliver Kirk joins me now from Berlin. Oliver, just to recap this, first of all, the complaints seem to have started 2 years ago, according to our own understanding, and it looks as though the cost is going to be more than 1 billion euros to remedy. So from BMW's perspective, not only are they facing a huge financial cost, but also reputational hit as well.
Yeah, there's certainly a reputational hit here, Jaman. I mean, listen, they first sort of came out with this on Tuesday of last week to say that basically they had to recall 1.5 million cars, which is obviously hugely material. And when you look at the kinds of cars they're recalling, it's really everything across the spectrum. It's their SUVs, the MXs, it's their sort of flagship 7 Series sedan, but it's also, Jumana, Rolls Royces. And if you paid, $500,000 for a car, it's kind of embarrassing to have to recall it to fix the brakes. And we understand that this was traced back to a Continental plant in Hungary. They had to recall all of these cars. And as you say, what we're understanding now is that we've seen some documentation that these complaints date back to June of 2020. So this is something that has been on their radar to a degree for at least 2 years. The question is why it took so long for them to bring it to market. Now, they did have a sort of slightly lighter recall of about 80,000 cars earlier in the year, but it's taken them a while to get to the bottom of this. And really, Jumana, we talked about the German auto industry quite a bit. This is really a bad time to have bad news in the auto sector. It's a time when investors Investors are a little bit less forgiving about kind of the consequences of that. And as you say, it's going to cost them €1 billion, but significantly for them, what it's going to do is going to downgrade their margin targets. They were supposed to get to 8 to 10% margins this quarter. They've now downgraded that to 6 to 7%. That is a material shift.
So much bad news coming out of the auto industry this year, as you've been highlighting on all of our shows. I just want to pivot to some of the political stories that are coming out of Germany now, because the latest reporting seems to show that Germany is looking to extend these temporary controls on all 9 of its land borders. And for me, what comes to mind is freedom of movement within Schengen. Doesn't that directly contravene the Schengen Agreement?
Completely, Jemana, and that is exactly what a lot of the critics have been saying. And you can imagine a lot of the countries that border Germany have been pretty unpleased with this. So what they're doing is they're instituting a 6-month temporary border checks on all of their borders. So we should say there's some that already exist between Poland, the Czech Republic, and Switzerland. But this is now extending to all of their land borders. So France, Luxembourg, Denmark, it's going to come across the board. The way that they're going around it is that they're saying that it's temporary. And for the government, the reason they're doing this is they've come under such intense pressure from all of the sort of far right and far left in state elections. And by the way, there's another state election this Sunday where the AfD Alternative for Deutschland, the far right, is expected to get the #1 slot. The government needs to be seen to be taking action on immigration. So this is their way of trying to block sort of illegal immigration. But we've had commentary from Poland, from Austria, all saying that it's basically unacceptable. And Jumana, we've also had commentary from Viktor Orban, who said, hey, Olaf Scholz, welcome to the club. We've had also from Geert Wilders, the far right in the Netherlands, saying this is a great idea. So you can see some of the internal politics in Europe here on full display, particularly with this new commission supposed to kick off in November.
Yeah, I mean, if his ally is Viktor Orban, that says a lot about the decision itself. Bloomberg's Oliver Kirk, thank you very much. I just want to leave the show with some lines that we're getting from the UniCredit CEO, who's been speaking to German newspaper Handelsblatt, saying they plan to be an active Commerzbank shareholder, and says it is important that Commerzbank gets more profitable. So leave you with those lines. Big story last week in banking. That was it for our show. Daybreak Europe is coming next.